Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 11th of April 2021. Lately I've been getting the vibe that there's loss of hope in the gold market. One viewer actually asked, how can we gauge investor sentiment and profit from it? And so that's the topic for today. Sentiment refers to the prevailing attitude of investors with respect to a particular asset. Now, we know that a huge factor driving asset prices is crowd psychology, and that's why we see extreme under and overvaluations, and that's where the opportunities lie. There's a great quote from the book Extraordinary Delusions and the Madness of Crowds that goes something like this. Men, it has been said, think in herds. It will be seen that they will go mad in herds, while they only recover their senses slowly and one by one. Interestingly, the crowd tends to be badly wrong at the beginning and the end of the trend, but are right during the big chunk in the middle. The smart money actually understands this and tends to be in the minority when they buy, when the majority are uninterested. And the smart money tends to sell when the majority are euphoric. So just to summarise then, there are basically three types of sentiment. Despair, trending, which can occur either upwards or downwards, and euphoria. And so for an investor to optimise their returns, they want to take the chunk of the profits while it's trending, but also importantly be able to recognise the despair and euphoric phase to know when to get in and when to get out. Okay, so that all sounds very nice and easy, but in reality, how do we assess what the current sentiment is regarding a particular asset? The first thing is to say is that charts are not essential. There are actually many ways to judge sentiment, and there are no particular right or wrong ways. You could try looking at news headlines, and what you'll notice is most of the time gold doesn't actually feature in the mainstream media. So when it does, it's worth taking note. Negative articles often appear at market bottoms, and one great example was last year where there was a big hit piece on silver in the Financial Times, and that was around the time that silver had bottomed. YouTube comments are usually made by retail investors with a wide range of experience, and I find that they can be a helpful gauge for how bullish or bearish that they're generally feeling. Now, most of the time you're just going to get a mixture of comments, but when you see the majority leaning in one particular direction, and particularly when you hear strong language, strong emotions, then that can be really useful. Social media views and followers tend to stagnate or might even reverse at market bottoms. Interestingly, for my channel, subscriber growth actually peaked in August last year, and 2 weeks ago I was actually losing subscribers. Oh, look, don't worry, I'm not too upset about it. Look, I'm going to look at it in a positive way. I don't think the quality of the content of my channel has varied that much over time. So I'm actually going to put it down to the likelihood that a decrease in the gold price means that people are less interested in gold. Interest in attending precious metal conferences tends to be very low at market bottoms, and conference organisers can often struggle to get sponsorship at those times, so it can be quite a tough business to be in. Rick Rule is superb at assessing sentiment. He doesn't look at charts at all, and it's through his work financing mining companies that he has a front seat view of the money flows within the sector. So when miners are finding it tough to get financing and he has very little competition, then sentiment is low. And so listening to people like him is really useful because he brings a different view of sentiment. and it's often quite accurate as well. Mining company mergers and acquisitions also tend to occur at market bottoms, and certainly we saw some large M&A activity last year. Another way of assessing sentiment is to chat to those who sell the asset. Interestingly, as we've seen recently, silver and gold actually behaves quite differently to other assets in that sales and shortages actually increase as the price drops. And one thing that can be useful, I find, is to find out what the level of buybacks is for these brokers. So what I mean by that is, are investors selling their metal back to the broker for resale? Now, where I am, that doesn't seem to be happening. And to me, that adds to the case that we are in an intact secular bull market. Another thing to look for is media ads, and this is usually a good signal at market peaks. So initially you might start to see small cash for gold ads here and there, and those ads will become larger and more prominent. Then maybe we'll see more ads for gold investment schemes, and then maybe at a major peak, gold miners will run major mainstream ad campaigns. Now, all of this is rather subjective. So some have actually tried to assign a number to express sentiment. And there are a variety of gold sentiment indices, so let's take a look at some of them. This is the Hulbert Gold Newsletter Sentiment Index shown in red compared to the GDX shown in blue. And we can see that sentiment tends to be lowest at market bottoms and highest at market tops. So as we can see here, sentiment was at a very extreme level over here, and that was in August 2020. And that coincided with the peak in both the GDX and in the gold price. And this is well into extreme levels here. At the moment, we're at a very, very low level. So a couple of weeks ago, we hit an extreme low here, and sentiment hasn't been that low at least in the last 3 years, as shown on this chart here. This is the gold optics indicator from Sentiment Trader. And again, this chart shows that sentiment is very low, as low as it has been, at least in the last couple of years. This is a chart showing the Sprott Bullion Sentiment Index, so that's shown by the blue line, and the dark green line here is the gold price. And I quite like this chart because it's longer term, so it goes back to 2014. And there's a few useful things with this chart. So firstly, we've got this red line here and this green line down here, and that marks 2 standard deviations from the mean. So when sentiment is above the red line or below the green line, then it can be said that sentiment is at an extreme. Now, if we look back here to 2015, we can see that we had a sentiment reading well below that green line. So that was an extreme level. But interestingly, that wasn't the bottom. It was a bottom, but it wasn't the ultimate bottom, which occurred later over here. And interestingly, at that very, very bottom level here, sentiment was actually within that mid-range here. So that was quite interesting. If we look forward to 2017 here, sentiment didn't quite reach that extreme level, and we had a bottom there still though. And something similar occurred in 2018 as well. So we can see that sentiment doesn't necessarily have to reach the extremes before price turns around, so it's not overly reliable. When we look back in November, if many of you remember, I was talking about that being close to or at the bottom there. And one of the reasons for saying that was that sentiment was pretty bearish, and here we can see it was close to but not quite at the extremes, and so I wondered if we were going to have a situation similar to this here. But price and sentiment did rise after that, and then it sank like a rock here, and we actually got a lower reading for the sentiment. And so certainly a couple of weeks ago here, we were well into the extreme levels. We've still just dipped into there again a little bit, but I wonder if that's the bottom of the sentiment over there. Look, it's hard to know. There is still room below, so it's not impossible, but I think the probabilities of getting a lower sentiment reading are decreasing. This is an option sentiment chart, and that's shown by the blue dotted line, and the black line is again the gold price. Right now, the sentiment reading here is 5%. I'd really like to see a longer term version of this chart so we can get a bigger picture view of what this actually means. But certainly according to this chart, there's not a huge downside left in terms of gold price sentiment. Now, some say that open interest in gold futures contracts might also be used to indicate sentiment. So let's have a look at that. One of the things you can notice from this chart here, so the total open interest of futures and options is shown in red below, and above we've got a bar chart of the gold price. And that's actually the futures price there. And what we can see from this is that open interest has almost halved in the past year, and now it's at the same kind of levels it was in 2018 and 2019. Okay, so we've covered a wide variety of ways of analysing and assessing sentiment. The lessons to come away with this are that it's usually at its most useful when sentiment is at extremes. The big problem is that it's a very woolly, subjective thing, and even euphoria can come in different magnitudes. Just when we think we've reached peak euphoria, things become even more crazy and euphoric. We've also seen that it's not a great timing tool because euphoria or despair can go on for much longer than you might expect. As we've seen, markets can continue to drop after sentiment has bottomed. Now, that's not to say that understanding market sentiment is useless. No, not at all. What I'm saying is that this is simply another imperfect tool in our box full of other imperfect tools. Next up, the market update. Let's start with looking at those long candle wicks that we spoke about last week. And so here I've just done a close-up. This is on the weekly scale. And here we've got the gold price. And you can see this long candle wick here with a very small body. And the same occurred in silver. Again, similar proportions as well. And I had said that you would want to see follow through for that to have any meaning. And by that, I meant that you would want to see a green candle with a close above this candle here. And that's exactly what we got for both gold and silver. So I think that's a good step forward. Now, the thing with these is they're not overly reliable, and the problem with this is that it doesn't give you a price target. It just says that the momentum is moving upwards. But yeah, I still think that that's a positive sign. Let's have a closer look at these prices. So let's zoom in on silver, and this time we're going to look much more closely than I normally do, and we're going to look at it on the 4-hourly scale. And for the last couple of weeks, we've been talking about this descending wedge here, which is the pattern that I was seeing. And this basically is considered as a bullish pattern. Last week, we actually broke out above that pattern. And this is a really interesting price movement here. So as I mentioned, I said that we might faff around below that trend line, which we did for a little while, but then price broke through there, and interestingly, it dropped again and retested the trend line, and that's not unusual. But the great thing is that it bounced straight back off there, and it looks like things are moving upwards again. So what can we expect if this pattern is the correct pattern? Well, the first target we're aiming for is this 26, which has been resistance for a while. But I don't expect it to be bad resistance. We might get a little bit of a knockback, but then I think we're just going to steam through there to get back into this trading range. And the ultimate target for this pattern is the top here, which is around $30. It's not clear how long it's going to take to get there. We never know these things, but to me, it looks like that's where we're heading for. What else can we see here? Well, maybe we're seeing a head and shoulders over here. So an inverse head and shoulders, that is, which again is a bullish pattern. And again, that will take us to above that 26 level here. So that's the next area that we're looking for. And look, we're not going to reach 30, in the next week or anything like that. These things always take longer than you think they will. So it's just a matter of being patient. But yeah, I think that this is bullish and I think we're headed upwards eventually, but it's not going to go up in a straight line. Okay, let's move on to gold. And again, we'll look at this at the 4-hourly scale. And we had these two lows here. And the big question is it the bottom? Look, I don't know, but there's so many things that point towards that being the case. So I would say the probabilities are good that it is, but as I said, it's always about probabilities. There's no such thing as certainties. If anyone tells you that they're certain that this or that is going to happen, then just ignore whatever else they say. This is a game of probabilities. Okay, what could this pattern be? Well, it could be a double bottom, in which case we've broken out and come back again to retest this area here, which I think what we're looking for here is this should be good support. Although it broke through there briefly, it bounced back up there. So we may hang around here for a little bit before we move upwards. This is promising as well, because note that we've made a higher high. And actually although it's only a couple of dollars, this was actually a higher low. So by definition, that is an uptrend. But let's see if that continues. And this is the SILJ on the daily scale. Again, looking pretty good. We bounced off of this area here, and we're back into the middle of this trading range here. It's going to take a little while, but what we're looking for is this to meander its way upwards. Once we get above that 1750 though, then we're going to see some fireworks. And this is the GDX on the daily scale, and this is looking really good. Look at this. So we've had this downtrend since August, and notice that each time we've bounced off this line, it's basically been a very harsh rejection. It hasn't hung around there for very long. But here, it's looking pretty good. We've got two green candles there. We've had a higher low here, and we've got a higher high. So again, we're in an uptrend. But what I'm thinking is a breakout above this trend line probably in the next week or so. So that's the next thing to look out for. I think we might hit a bit of an issue at 36, in which case we might come back down again. Maybe that's what's going to happen is if we do break out here, it can come back down again to retest this trend line before making its way upwards. But yeah, I think that's looking really promising. I think the miners are doing pretty well. And another way of gauging how well the miners are doing is how it performs relative to gold. So this is the HUI to gold index. And so any upwards move means that the miners are outperforming gold. Now, I've drawn this downsloping channel here, which again has been formed since August. And we've been moving up back since March, really. And so the miners have been outperforming gold since March. And although this is a generalization, so this is lumping a whole bunch of the major miners together in one lump. Obviously, you know, individual miners will behave differently, but certainly I've been noticing my individual miners one by one over the past 2-3 weeks. One by one, they've been breaking out upwards outside of their individual patterns. So that's very, very encouraging. What about this here? Well, we're right at the top of this channel here. And so if we break out above this, I think that this is going to do really well. This suggests that the miners are going to outperform gold. And actually, this is on the daily scale. But if we zoom out onto the monthly scale, we get a bigger picture view of what's going on here. So this is on the log scale and monthly scale. And again, it's the HUI gold ratio. And I've drawn this down sloping trend line here. We hit that trend line and have slowly been correcting, but it's been a pretty gentle correction on this chart anyway, although I'm sure it didn't feel like that. And this is the line here that we're looking at. So that kind of relates to about a level of 0.18 here. And that's when things are really, really going to get going. I think we're going to see some very, very nice potential returns when we get above that for the miners. At the moment, we're just above the 0.16 level. So I think when we break out above this channel, it could move upwards. We could get a little bit of faffing around here for a little while before we move up. But that's the number to watch, is the 0.18 here. That's going to be pretty exciting. Some interesting things going to come up. So yeah, overall, I'm still very, very bullish on this. Look, there are no guarantees. Nobody knows for certain, but that's the sense that I'm getting anyway. So just an update. I know some of you will have heard my little saga about my parking sensors on my car conking out, and it's quite an old car. I think it's almost 15 years old now, and I'm having problems with the car, so I need to get a new one. So anyway, we went to the car dealership and it was absolutely packed. Every single assistant was busy, either with a customer or out on doing test drives with customers. So yeah, people are buying cars big time. Anyway, when we put our order in, we were told that it's going to be a 4-month wait before I can take delivery of it. So yeah, there's shortage of cars big time over here anyway. Is anyone else finding that? And not just cars, even things like furniture. So we ordered a bit of furniture, and it's a well-known brand. It's an international brand, and we ordered it in September, and it only arrived in February. So, you know, that's a long wait for stuff. So I don't know, it's a bit concerning. I'm seeing more and more stories of shortages and things as well. I've seen issues with ice cream. I came across an incident also with 100 GSM paper in the local stationers as well because of shipping delays. So yeah, has anyone else got any stories where they've had problems getting hold of stuff or shortages? But yeah, I think that's a bit worrying. Anyway, that's it from me for this week. All the best and see you next week. Bye.